October 14th, 2024. Today we had a bull trend day. We had a gap up on the open, and the really important part is that we did not close the gap with yesterday's high. So, whenever you start a day with a gap up and the market does not overlap with yesterday's high, you have to pay a lot of attention to this gap because it could qualify as a first open gap. If this gap remains open and you get another gap early in the day, there is a dramatically increased chance of a bull trend day. This is the first open gap, and second open gap initially was the bar 3 high and the bar 5 low. You can see, although we went below the bar 5 low, we never actually got back to the bar 3 high on bar 19, which is what made these credible buys, since we were back to always in long and we still had that second open gap with the 19 low and the 3 high. So it's really important to pay attention to gaps early in the days for two reasons. One would be if it turns into a trend day, you can rely on the gaps and basically rely on the gaps as a credible argument for a bull trend day. And I think the second reason is that if it starts becoming more of a trading range day and you're starting to get a lot of trading range price action, and you get a credible reversal, it's okay to trade the reversal. It's okay to trade the reversal and look for the gaps to close, because gaps will generally close when you're getting an opening reversal like that. Bar 1, so a bull bar closing near its high and an obvious open gap with yesterday's high. So bar 1 is good for the bulls, and there's an increased chance of some sort of bull trend day whenever you get obviously a gap and a strong bull bar closing on its high. Gap is up, so slightly better chance that you get a bull trend than you get a bear trend. So good looking bar for the bulls on bar 1. Bar 2, another bull close. So we have consecutive bull closes, 1 and 2. However, 2 is a lot more of a doji bar. So while it is reasonable to be long, 2 is not really ideal follow through for the bulls. However, with the gap and the first bar being a bull bar closing near its high and the second bar being still a bull close, there's going to be buyers below 2 willing to scale in lower. 3, another bull bar. So we have 3 straight bull closes, 1, 2, 3. It's by the close for the bulls on bar 3. However, it's not really all that strong since bar 2 is a pause bar and 3 has a large tail on the top and a tail on the bottom as well. But it still is by the close, and it's reasonable to be long, taking a chance that we have a bull trend day. We have the first obvious open gap with yesterday's high and the bar 1 high, or the bar 1 low. So the question that everybody's asking is, what will the second gap look like if there is a second gap? 4, a big bull bar. It's a buy climax and a bull bar closing near its high. So you could buy the close of 4, taking a chance that we're going to get a second leg up. But bar 4 is really climactic and really far from the moving average is the issue. So if you're taking that, your stop has to be below 1. If your stop is below 1, you're risking 25 plus points. So if you're going to risk that much, you have to be pretty sure that of two things, I guess. I would say, one, you're not going to let that stop get hit if you buy the close of 4 and you put a stop below 1. You're going to get out long before that. So you have to be confident in your management, and you have to be confident that we're going higher. It's not very hard to be confident that we're going higher when we're rallying, the way we are with bars 1 through 4. However, I'm not sure how much higher we're going to go. We might get a second and or a third leg up, but still not overly positive that we're going to go a whole bunch higher. 5, a bear bar. So disappointing, I think, if you bought the close of 4 to see bar 5. Some bulls more interested in buying a pullback of bar 4 than they were in buying the close of bar 4. However, 4 for the bears was a possible high of the day, but it was unable to close on its low. 5 for the bears was a possible high of the day, but it was unable to close on its low, so it's not really worth shorting. And we have a 5-bar bull micro channel up to this point. So we have not traded below another bar yet today. So the first time we do trade below another bar, we are very, very likely going to find buyers below. 6, a bull bar closing near its high. Do you buy above 6? You can, but you have to have a wide stop. I don't think a stop below 5 works. I think that while this is really bullish and we are going to go higher, it could be pretty delayed. So we might have to go a lot more sideways first. So it's not, if you're going to buy above 6, you're probably going to put a stop below 1, not below 5. So it's okay to do, but your risk is even larger. So there might be sellers above. 7, a bear bar closing near its low. It's a possible high of the day. So some bears would sell below 7, taking a chance that the bulls are going to give up and that we're going to get a swing down. My issue with buying below or with selling below 7, there's a couple of issues. One is look at what the bears have done so far today. Nothing. They don't have any bars besides closing near their lows besides bar 7. So they only have 2 bear closes in the first 7 bars. And the bulls have 3 bars that are really large and closing on their highs. So that's the first problem with selling 7. The second problem is that bars 1 through 7, we haven't traded below another bar yet. So if we trade below this bar during bar 8, you are selling the first time we've traded below another bar yet today. And usually you don't want to be the trader doing that. So there's probably more buyers below 7 than there are sellers below 7. Since 7 is a credible high of the day, it should get a second leg sideways to down. However, it's pretty difficult to want to take the short for anything, substantial. So 8, disappointing follow through if you sold below 7. You can see there were buyers at the bar 6 low. We're going to get a second leg sideways to down from 7 and 8. However, we are also probably going to get a second leg sideways to up. 9, a bull bar closing near its high. Do you buy above 9? I probably would not. If you do, it's a high 1, so you're going to have to use a wide stop still. High 1s normally lead to deeper corrections and then trend resumption. So 9 closing on its high, I think, is another problem for the bears who sold below 7. We now have 4 bull bars closing near their highs. So the reality is there's going to be buyers below 9. A lot of traders prefer to buy below high 1s rather than buy above them, like we get here on bar 9. So bar 10, buyers below 9, as we can see, a large tail on the bottom of 10. It's a second leg down for the bears. So the bears who sold below 7 get a pullback on 8 and 9, and now 10 would be qualified as their second leg sideways to down. So not much protection left for the bears who are short, and it really hasn't done what they wanted. If you sold below 7, it was probably going to go a little bit sideways first, but you probably didn't want to see 9 close on its high. You definitely didn't want to see 10 get bought all the way back up. So this is more of an area where bears might look to buy back shorts, which is exactly what they do on bar 11. Bar 11, a bull bar closing near its high, but a tail on the top. However, still a good-looking bull bar, and we're still going to be going above the bar 7 high at this point. Since the bears who sold took a low probability trade, we are probably going to go above the 7 high. 12, another bull bar, put a large tail on the top. 11, like I said, a good-looking bull bar, and 12 is follow-through, but a large tail, so not really sure how great it is. We still haven't touched the moving average yet today, so we're still always in long. It's still a bull trend, and we still have 2 open gaps. So I think the big thing is, everyone knows we're going to pull back. We're in an area where we've rallied a lot on the open. We've gotten 25-ish points already, and we're 12 bars into the day. So it's probably not going to be like a 200-point bull trend day today. It's probably going to be, more of a bull trend / trading range day. And whenever you get a climactic move on the open, usually only lasts the first 15 to 20 bars. So there's probably going to be sellers somewhere above, and we're going to get a pullback. The question that people are asking is, are we going to pull back to the bar 3 high? Because if we do pull back to the bar 3 high, that would close the gap and really reduce the odds that the bulls can get a bull trend day today. 13, another bull bar closing near its high. 3 straight bull bars, 11, 12, 13. It's by the close, yes, but you're buying really high and possibly a third push up. First leg is to bar 5, to bar 4, pullback on bar 5, and then a second leg up 6, and then we got a 2-legged correction, 7 through 10, and then we get a third leg up, 11, 12, 13. So while it is always in long, it's a possible wedge, 4, 7, 13, and if it might be better to look to buy below these bars than above them. It is a breakout, but in this area it's a bit tricky. So probably though, rather than if you do buy the close of 13 and use a really wide stop, you're going to get out around break even. Really, really unlikely that the bulls who buy up here will remain trapped. So if you buy and you're willing to scale in, you're probably going to make money. So the traders who are buying willing to scale in, they don't have a stop below 10. They're probably buying more below 10, if anything, when we sell off down there. 14, a bear bar, but a large tail, not really any sort of credible trap. The bulls are hoping it's just a pullback, and the bears are hoping it's a wedge and the start of a reversal. Not really all that likely, though, even though that is what ended up essentially happening. 15, another bear bar. It's a doji bar. You can see sellers above the high 1, 14, but probably buyers not too far below 15. 16, a big bear bar closing near its low. We have a doji bar 15. So you have to imagine probably buyers somewhere below 16. However, some bulls will exit below 16. A bear bar closing near its low and a possible wedge top. So some traders will exit their longs below 16. I don't think you have to. I think it's okay to hold long. But where's your stop? It's kind of hard because when you get the new high on 13, most traders can move their stops to the bar 5 low or the bar 10 low, expecting that we're probably not going to get another leg. Or sorry, we're probably not going to go down here if we're going to get the rally. This is one of those days where it managed to trap those bulls out before getting another bounce. Bar 17 is a high one buy for the bulls. It's really not, again, all that worth buying unless you have a wide stop, because after 3 straight bear bars, we're probably going to get a second leg sideways to down. And after 3 straight bear bars, this is probably when we're going to try and test the moving average. You can see we were unable to trade above 17, which is pretty disappointing for the traders who were looking to buy for a swing, or the traders who were holding long, taking a chance that we were going to get some sort of breakout above the potential wedge, or at least one more leg up. So 17, a bit disappointing that we were never able to trigger. 18, a giant bear bar. Really just looks like a second leg down. So is it worth selling the close of 18? No, because you have to have a wide stop, and there's going to be buyers at the moving average the first time we get there. However, with 18, you have to start wondering if we're going to touch the bar 3 high, because if we are, this is now a trading range day. So 18, a good looking bear bar, but a tail on the bottom, possible second leg down. 19, follow through for the bears, but again, a large tail and probably buyers at the moving average. Just looks like 2 legs down from 14 through 19. However, 15 through 19 is a bear micro channel, so increased chance that there's sellers above the first time we rally. 20 is a bull bar closing on its high, and what's really notable is that we do not trigger above 19, so that's good for the bulls. It's an inside bar that makes 19 the signal bar that makes 20 the signal bar instead of 19. And we did not get a close below the moving average. 19 closed on the moving average, but bulls bought it immediately, causing 20. So we still do not have a close below the moving average yet today. 21 consecutive bull bars. You can buy the close of 21. We're back to always in long 2021, and we kept this gap open right here. The bulls who bought for any reason and moved their stop to these lows once we rallied up here, which, is the logic is there because it's another higher high. So you move your stop to the higher low. So the logic is reasonable for that. But the thing to remember is that those traders are now trapped out, and now we have consecutive bull bars closing near their highs 2021. So some traders will look to buy the close of bar 21, and since we're back to always in long, and hope that the gap stays open. So as long as we don't trade below the 19 low, because realistically, if we go below 19, we're going to touch the 3 high. So as long as we don't trade below the 19 low, that premise is valid. The bears who sold the close of 19, it's not a good sell to close by any stretch of the imagination. However, it was consecutive bear bars 18, 19, so we should test back to the bar 19 close. And once we do test back to it, you have to be thinking we're definitely going to get back to the bar 13 close and the bar 22 close, considering the fact that those are both reasonable areas to buy. And if the bears are managing to scale in and make money, the bulls should definitely be able to scale in and make money on a day like this. So expecting trading range behavior. 23, a bear bar, but a large tail on the bottom. You can see buyers at the moving average. So 3 straight bull bars, yes, but disappointing follow through 23. 24, another bear bar, selling off to around the bar 19 close, where traders initially started buying back their shorts. You can see 24 is unable to close below the moving average, which is good. It's an increased chance, good for the bulls. It's an increased chance that we're not going to end up going much lower. 25 trades back down to around the bar 19 close, and bears who are buying back shorts for any reason on 24. 25, again, are buying back shorts. 25 is a high 2. High 1 is bar 20, and the high 2 would be bar 25. It's a double bottom, 20, 25, so bulls want to break out above the neckline, 23 high, and a measure move up. But 25 has a large tail on the top, so that decreases the chances that we're going to rally all that far. However, bears still unable to get to close below the moving average, and so long as that is the case, it's okay to be long. 26, a bull bar, a large tail on the top. However, you have to be expecting buyers below consecutive bull bars, 25, 26, and we're getting back to the 22 close, probably all the way to the 13 close. So 27, buyers below 26 during 27. We're going to get at least one more leg sideways to up. And then 28, another bull bar. You can see we're closing at the bar 26 high. We're trying to rally above it, and we're trying to get back to at least the bar 22 close. And like I said, rally to those magnets above. 29, consecutive bull bars, 28, 29. We're rallying, and we're always in long, and it's a bull bar closing near its high. So reasonable to buy the close. You don't have to exit for any reason here. Bulls, you can put your stop below 25 at this point. and just exit if you get a really strong bear bar closing near its low. 30, another bull bar. So 3 straight bull bars, 28, 29, 30. If we're going to rally, this is probably where we're going to at least try to start it. Doesn't mean we're going to go straight up, but we should rally. If we're going to rally, it should be here. 31, another bull bar, headed into a resistance area around the bar 13 close and the high of the day. But we're going to at least get to the high of the day since breakout of the 18 bar range is a very high probability, and we're very close to the high, and there's very little chance that we get all the way back down to the bar 1 low today. So we're probably getting above the 15 high at least. So even though 31 is climactic, there's at least a couple points left to the trade. 32, an inside bar, a high 1 buy for the bulls. The bears are hoping the rally is a bull trap, but not very likely considering the fact that we haven't even closed below the moving average yet today. 33, inside pattern, 32, 33, probably buyers below 33 and probably sellers not too far above. It is a final flag, so you have to keep that in mind when you get consecutive inside bars, especially in this context. But who wants to sell below? Probably no one, considering it's a bull bar. And we just had 4 straight bull closes, and now you want to sell below a bull bar? Probably not. So buyers below 33 during 34. But do you want to buy above 34? Well, not necessarily. We are always in long, and we're probably going at least a little bit higher. But 34 is a bear bar, and that's relatively disappointing. 35, a bull bar, breaks to a new high of the day, but we end up getting sellers at that new high during 35. 35, it's a good looking, like I said, it's still good for the bulls that we got the breakout above 34 and the breakout above the high of the day, but we're trying to make another higher low with 34 as the low. 36, an inside bar, a high 1 for the bulls. Good for the bulls. We're probably going at least a little bit higher. However, it's a bear close, so not really that great. Sellers above probably scaling in higher, but if we go below, buyers below scaling in lower. 37, a doji bar. So probably, bears are hoping for some sort of midday reversal, a wedge, maybe 7, 14, and 37. However, who really wants to sell below a doji bar when we haven't closed below the moving average yet today? Pretty much nobody. 38, a bull bar, traded above the bar 37 high, probably sellers somewhere above scaling in higher. It's an outside bar since it went to the low and to the high, so it's variation, or above the high, so it is a variation of an outside bar. So is 39. 39 is a variation of an inside bar. So 38, 39 can both be looked at as an OO pattern or an IOI pattern. Either way, it's breakout mode. 40, an inside bar. It's a tight trading range. We've been in a tight trading range. And 40 is, again, an IOI pattern, so a possible swing short, but really not all that great to be selling a midday reversal and what's probably a bull trend day at this point. 41, outside up, good for the bulls. You can see we're establishing a ledge. So what a ledge is when you have at least 4 bars. I'm going to zoom in on the top half of the day just because it's going to be easier to show this. But a ledge is when you have at least 4 bars with the same low or the same high. When you get that, there's an 80% chance you're going to go below it and then rally back above it. Or when you get a ledge bottom, 80% chance you're going to go below it and then back above it within a day or two. And here, 80% chance you're going to go above it and back below it within a day or two. So this is a ledge for the bears, 37 through 42, and this is a ledge for the bulls, 47 through 53. I think that this was probably adequately tested going below. We see we try to get above it. We failed below it and then rallied back above it. This is probably adequately tested. I don't think this is. I think that we failed the breakout to the downside and we rallied above this, but we're probably going to have to get back to this area. So I do think we're coming back down to this tomorrow. Also, when you get a bull trend day, the following day has a 75% chance of 2 hours of sideways to down trading. So you have to be expecting that we're probably going to get back into that area. So 37, 38, a bull bar. Oh, wait, where was I again? 42, I think. So 42, a ledge bottom, like I mentioned, and then 43, a bull bar closing near its high. The problem is it's a breakout above the tight trading range in the ledge, so it's pretty clearly a final flag. So 44, even if it's good looking follow through, we're probably going to get back down to the ledge because it's such a powerful magnet because it's pretty unusual. 44, a bear bar. You can see probably buyers below 43 scaling and lower, but a pretty disappointing bar on 44, so some bulls will look to exit. 45, follow through for the bears. I think after 44, we're going to get at least a second leg sideways to down. However, I don't know that we're going to, I don't know how far below the moving average we're going to get because we haven't closed below it yet today. 46, bear bar, but a doji bar, so probably buyers below. A low 1 short for the bears, an inside bar, so a low 1. However, I don't really want to sell a low one right on a flat moving average. So you can see buyers below 46 during 47. 47, a bull doji bar. Do you buy above 47? I probably would not. I think I'd rather wait. Probably more sellers above scaling and higher. 48, an inside bar, a high one for the bulls. Probably buyers not too far below, probably sellers not too far above. 49, a bear bar, but it just looks like a second leg down from 44, 45, and 46. So 49 looks like a second leg down. 50, a bull bar, an inside bar. It's an IOI pattern, but the ledge that's forming 47 through 50 is a little more important. So probably buyers if we go below 50, but it's a tight trading range, right? So you don't really want to buy above 50 with stop below 50 because of the tight trading range price action. You can very easily break out for a quick measured move in either direction of the range. Maybe something like that, something like this. So whenever you get, so it ended up being this, whenever you get a tight trading range and the market tries to break out in one direction, a lot of times you can look for a measured move you can look for a reversal around a measured move. So we got a measured move down of the tight trading range and then a reversal up from it on 55. So 51 an inside bar, it's a high one for the bulls. The bears are looking for a third leg down, probably buyers below, probably sellers above. You can see buyers below 51 during 52, but buyers below a high one, probably sellers above. 53, an inside bar, a doji bar, and you can see eventually bulls are giving up on breaking through that price. So 54, a bear bar closing near its low. However, again, probably buyers below scaling in lower, so probably not that great to sell below 54. You can see it's possibly forming some sort of wedge, 39, 45, 49, or something in that area. And a pretty large failed breakout below on 55 and a reversal up. A bull bar closing near its high on 55. It's a gap bar. You can buy above 55, taking a chance that we continue to rally and we get at least a new high of the day, considering the fact that the bar 43 close is pretty strong. We should get back up there, and we just had a moving average gap bar. So odds are we're going to test a new high. Reasonable to buy the close of 55. 56, follow through for the bulls, rallied to around the 43 close. The bulls who bought the 43 close, disappointed in how the trade was going, added probably above 55 and then exited their whole trade second with a profit and first at break even around the close of 43. 57, a bull inside bar, so it's a high one for the bulls. We're probably going at least a little bit higher. 58, another bull bar closing near its high. Reasonable by the close, but your stop is below 55, so your risk is a lot and your reward might not be all that great, so tough to buy. 59, a doji bar. So when you get these pause bars, it's possible that the first leg up is 55, 56, pause 57, second leg 58, pause 59, and then maybe you get some sort of third leg up. Obviously, the third leg up is a little more parabolic in this case, but that's not very uncommon because that forms a parabolic wedge on a lower time frame. So 59, a bull bar, you can see a couple of legs up, and then 60, a bear bar closing near its low. Bulls will probably exit because we did test the new high, so we have reached all the magnets that we needed to. 61, a bull bar, but a large tail on the top, triggering the high one buy above 60. Not really a great buy though, bear bar. Surprise 62, good for the bulls, probably going at least a little bit higher, but could get a deep pullback first. And this is what trend days will do. They'll trap out traders with bad stops. The trader who buys this close with a stop below here, they get stopped out. The trader who buys this close with a stop below here, they get stopped out. So buying this high is kind of difficult. It's better to, buy the lows of those areas for retests of the highs. So it's, it was a bull trend, but you had to kind of trade it like a trading range and sit through deep pullbacks. So instead of buying here with a stop here, you have to buy here with a stop way down here and look for the test back up into here. So although it was a bull trend, like I said, probably traded a lot like a trading range. So 63, a bull bar, but a large tail on the top. So not really that great to do anything. Probably buyers below during 64. And then you get 3 straight bear bars to 66, but they're unable to get any sort of close below the moving average. The moment it touches the moving average, you can see the bulls bought it, reversal up 67. And then we sort of rallied a little bit higher and then got a breakout 74, 75, 76, but really climactic and a reversal down 77, 78, 79. So this will probably get a second leg sideways down. It's a pretty big reversal. This will probably get a second leg sideways top. So tomorrow, if we open up here, you're probably looking for a reversal back into this area. For trades on the day, you could have bought the close of 1, you could have bought the close of 3, 4, maybe 11, 12, or 11 or 13, but it's kind of difficult. You probably could have sold below 7, but it's pretty low probability. Better to wait. You buy above 20 or better 21, scale in. You buy 29, 30, 31, but kind of hard to sit through all of this. Probably exit somewhere in here. And you can buy again above 55 or 57, 58. Any of those bars. For limit orders, there's usually a couple of really easy limit orders on days like this. You could have bought below 21 or a deep pullback during 23 or 24 with a stop below 19, taking a chance to get the gap open. Probably buyers below 33. And that's probably the easiest things that I see. So for tomorrow, we have a bull trend. Possible we're just trying to get to 6,000. So maybe we get a vacuum test and a huge bull trend day tomorrow up to 6,000. But I'm not sure it's all that likely because that would be a pretty large day. But if that happens, that's, this is the target. We're going to 6,000. It's just a question of, are we going to pull back first? And there's kind of two schools of thought with that. One is, we're still 100 points away from the magnet, so we very well might pull back first. However, the vacuum test argument is that if I'm a bull or if I'm a bear and I know that I want to short, but I also know the market's going to go to 6,000. I don't really know when, but I know it's going there. Why would I sell before it goes to 6,000? And if I'm a bull and I know we're going to 6,000, and I know I can take profits at 6,000, why would I exit my longs before we get there? So you have, when you have situations like that where the magnet is 100 points away on the daily chart and it's just far enough that it would be a large bull trend to get there, you have to be wondering if we're going to get up to this magnet. The weekly chart, you can see we're trading above that high. Again, it wouldn't be surprising if we rallied up to here and got a reversal down. But following 5 straight bull closes on the weekly chart, we're probably going at least a little bit higher. The monthly chart, you can see, probably going to get into this area this month. The tail sizes, so on this bar, just from this bar, the tail size decreased and the body size increased. And here, the tail size has decreased so far, and the bulls are hoping the body size can increase again and lead to a new breakout. It might be climactic if you get it, but still a possible new breakout. All right, that is going to be it for the review.